Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Tuesday, February 8th. The bulls may take a breather on Wall Street today following an interest rate hike by the People's Bank of China. Earlier, U.S. futures had been pointing to another positive open after the Dow Industrials once again closed at their highest level since June of 2008 yesterday. But futures have since backed off those gains as investors react to China's quarter percentage point increase in benchmark lending and deposit rates. It's the third such rate hike in 4 months and indicates that China is committed to keeping a lid on inflation, which could curb demand for all sorts of goods from the world's second largest economy.
Stocks around the world are mixed, but a couple European markets are getting a boost from strong corporate earnings. Swiss banking giant UBS is rising about 2% here and overseas, following its quarterly report. UBS actually missed expectations with a 7% increase in net profit. But the company also reported its second consecutive quarter of cash inflows from wealthy clients, turning around a trend of massive outflows over the last several years. That's an optimistic sign for the future, and investors are reacting positively. Meanwhile, a 5% jump in shares of ArcelorMittal is helping Dutch stocks. The steelmaker posted a net loss in the fourth quarter, but said that the gradual recovery of demand should continue throughout the year, leading to an increase in production.
Here in the U.S., most of the big names out with earnings this morning are losing ground in the pre-market. Coventry Health posted a 38% gain in fourth quarter profit, topping expectations. But Coventry's earnings estimate for the full year fell short of analyst forecast, pushing the stock 1% lower. Stock exchange operator NYSE Euronext is losing nearly 2% after posting a 22% decline in profit and a 7% drop in revenue. Shares of Sara are also falling. The food company missed Wall Street estimates despite more than doubling its net income in the latest quarter. But one of the day's biggest stock losers may be Teva Pharmaceuticals. Its quarterly profit also doubled but missed expectations. Those shares are falling nearly 4% right now. After today's closing bell, Walt Disney will report its quarterly results. Ahead of that report, Wunderlich boosted its price target on the stock from $36 to $41 a share.
Analysts are also weighing in on a couple of the M&A deals announced yesterday. Stifel Nicolaus upgraded Danaher to a buy rating, following its purchase of biomedical equipment maker Beckman Coulter. But the reaction was not as positive for the players in yesterday's energy industry tie-up. After Pride International agreed to be bought out by Ensco, Tudor Pickering, Barclays, BMO Capital, and Macquarie all cut their ratings on Pride. Macquarie also downgraded Ensco to neutral. But Wells Fargo had a different take on the deal, boosting both stocks to outperform. Finally, keep an eye on General Motors today. Morgan Stanley cut its fourth quarter earnings estimate for the automaker all the way from 77 to 55 cents a share. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.